Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, you've been very busy on the portfolio this week and to the greater good of the portfolio and the charity out there. But let's start off talking about the top 40, which is what we've done essentially for the last couple of sessions of the show, and why you think maybe there's still more weakness to be had.
Yeah, that's right. We've been doing this every week just to lay the background, really, and it's still quite interesting. We've been looking at the top 40 for a number of weeks, looking at this potential head and shoulders pattern that has been playing out in the market. And you can see it there indicated with the two shoulders with the head in the middle. And then we had this rally into the middle of July, which has sort of petered out, and we've seen some fairly heavy selling over the last week or so. And we're once again back down at the neckline of that large head and shoulders pattern. So it's difficult to say where to from here, but if that pattern is still valid, which I think it might be, then the potential is still there for further weakness in the market going forward in the next couple of weeks or the next couple of months at some stage. Also, what gets me, I suppose, cautious is the 50-day moving average on that top 40 index. And the 50-day moving average is the light green line over there. Now, you notice that has started to take a slightly negative form to it. In other words, it's pointing downwards. And I always like to look at the 50-day moving average as a good read of the medium-term momentum in the market. And when it's pointing down like it is now, that is telling you that the medium-term momentum is weak. And whilst that is the case, I think we've got to be careful of expecting too much upside from this market. I wouldn't be that surprised if there is still more downside to come. And I think there's plenty of risks out there still in the world. The China story to me is still a very, very big risk. That market crashing and not looking good, even with the efforts that the Chinese government have made to try and stop the selling in the Chinese market. That for me is a concern. And then another concern, which has not been documented that much, but it's the breadth on the US markets. The S&P 500 and the Dow have been relatively strong, but if you actually look below the line and you look at how many stocks are participating in that rally, the number of stocks that are participating in the rally has been declining. And there's only really now a handful of tech stocks and biotech stocks that have been holding up the whole market. From a broader market breadth perspective, the US markets are not looking that fantastic. So I think with all of those sort of things in the background, I do think we need to be careful of thinking that this market's going to go screaming a lot higher. My fear is that we're going to still have another leg to the downside, and that top 40 chart to me sort of kind of still indicates that. And we are quite well positioned for that if that happens. We've got an option structure which works beautifully below the neckline of that head and shoulder structure. So I'm not going to be upset if we see a correction in the market from here, because we're quite positioned for that anyway.
Yeah. Well, that sort of leads us to a couple of the shares which you went short of. But before we get to them, and you talk about mixed results this week. So let's start off with the losing trade, and that was a long position in Kumba, which was quite a cheeky little position that you took. Just go back to why you decided to go long, whereas I suppose the rest of the market was pretty much going against you.
Yeah, it certainly was a cheeky position. I think I called it a controversial position last week when we did the trade. And what had happened was look, Kumba we know is very, very bombed out. Along with many of the other resource shares in our market, it's extremely bombed out. It's had a horrible time over the last couple of years. It's one of the most heavily shorted shares on the JSE though. And what happened was last week the company came out with results which were disappointing, and they passed the dividend, and we know that, but my feeling was that given that there was such a lot of short interest in the stock already, and now that all this bad news had come out, there was potential for some short covering to actually say, right, we've got what we came here for in terms of the downside, let's cover those shorts. And often in the stock, the short squeezes can actually be very, very aggressive. You can see Kumba bouncing 20, 30, 40% sometimes when a really strong bout of short covering gets going. So I thought that last week might well be the catalyst for that. And I did a bit of bottom picking, which I said at the time is always a dangerous thing to do, and it remains a dangerous thing to do. And I suppose we've paid the price for that this week. I went long 450 CFDs at 117 Rand 20 and a stop loss of 115 Rand. Now, I was right for a couple of hours with the trade. It did look good. It did look good. I mean, it bounced all the way to 228 Rand. So at one point, we were looking pretty good on this trade, but it didn't last. The buying that the short covering that I was expecting didn't last and didn't follow through. And at the end of it, the share price continued to dribble lower, and we were stopped out a few days later at 115 Rand. And it meant that we lost 1,215 Rand, including costs, which in the scheme of our portfolio really is nothing. It's 0.3% of our total capital. So the loss is minuscule. But I think what's good here is that we stuck to the stop loss, and you can see what's happened to that share price since then. It's gone a whole lot lower. So again, a situation where a stop loss saved us from bigger losses. And as I say so often on this show, taking care of the losses is really the secret to the success that we've had on this show. Keeping those losses small has been the main reason why we've done well. If you take care of the losses, the winners will take care of themselves.
And also the fact that it was a small position, and at the time you said, well, if there is a big uptick, if there's a big short squeeze, even if you take a 0.3% of your capital, you could actually do quite well out of it. So if there was a big short squeeze, but as you say, proved not the case.
Proved not to be the case, and again, a lesson learned. You know, we're here to promote proper trading principles, and bottom picking is not really the right thing to do. And we've learned that lesson yet again. So, you know, it shows you, even sometimes as a seasoned trader, we still make these mistakes from time to time. And it's a constant learning experience.
Yeah, well, I suppose you're enticed in. Garth, but it's a much happier tale for the other two shares, which you went short of, ironically. So if you'd gone short Kumba, you'd have been really in the pound seats this week. Sasol, and Sasol's been under pressure. So tell us whether you're still in that position or not.
Yes, I'm still in this position. We did 2 trades last week that were sort of based on the situation, the happenings in the oil price. The one was the short on Sasol, another one was a short on MTN, which we'll talk about next. But looking at this short trade on Sasol, what I'd identified was the fact that the share price had broken below this uptrend, which goes back to January of this year. It had also failed at that little downtrend, which comes through and started in April. And we saw the share breaking down below that support and then rallying back up to test it. And often what happens is your previous support levels then become resistance levels if the market bounces back up to that area. And that's exactly what happened here. And there was resistance in the area around about 440 Rand for Sasol. And we saw the share price reversing down from that resistance. So I used that as an opportunity to go short. And I sold short 200 CFDs at a price of 435 Rand. And my stop loss was 451 Rand. And I'm looking for the price here to go down to, now my initial target was 414 Rand, but I think there's more downside. I actually think Sasol can go back to 400 Rand and possibly even lower than that. If you look at what's happening in the oil market and also take into consideration that there's this huge glut of additional supply that's going to come on from Iran, there's no reason to be bullish about oil. And therefore there's no reason to be bullish about Sasol. So I'm going to stay short here. We're doing quite well on this trade, but I do think there's further downside to come for Sasol.
Okay, so it's in the money. I mean, so would you extend maybe your target, as you said? So initially your target was about 414 or thereabouts.
Yeah.
Do you think?
I might do. What I might do is actually run a trailing stop loss where you look to hold that short trade, but if it starts to break above a prior day's high or a prior 2 days high, then you would look to close that short out so that you don't give back all the profits that we've made so far.
Okay, so that position is open and it's making money. And then MTN. MTN you must be really pleased with, and that large gap tells the story, I suppose.
That's right. We've seen a huge gap down in this share price today, and the gap has come about as a result of a trading update whereby MTN have indicated that their earnings are going to be down between 10 and 15% on the prior comparable period. That's worse than what the market was expecting. And there's concern that they might need to trim the dividend and what have you. So the share price has taken a big hit on the day. It's down about 5% following that news. And the great news for us is that we were short MTN, and it's allowed us to take profits. So if we just quickly unpack why we did this trade. You know, last week I identified that there was this small little triangle pattern that was evident on the chart of MTN. And I made the point that that triangle, that sort of consolidation happened within an overall falling trend on the stock. It also happened at a time when the market as a whole had rallied 3,500 points, and yet in that time MTN had managed to go absolutely nowhere. And that to me said there was underlying inherent weakness in the stock, and that if there was any further weakness in the market, then MTN would most likely break to the downside. And those triangle patterns like that one I've identified, they are invariably continuation patterns, and they invariably continue in the direction in which they came into the trend.
I mean, and do you feel that this is a great argument in support of technical analysis? for in use of trading.
Yeah.
That there's a weakness, and maybe the reason only emerges for the weakness down the line, but the market is telling you something.
Very, very much so. I'm a big believer in using technical analysis and looking at the trading action and follow the price. I know there's guys out there that think technical analysis is rubbish and that it doesn't work. We've shown for 6 years on this show that it does work. As long as you apply it with a systematic risk management approach and you control your position sizes and so on, technical analysis does work. And watching the trading action and watching the price action in MTN, seeing how weak it was during a strong market in the middle of July, that for me was a clue. And yes, we didn't know that the trading update was going to be as weak as it has been today. In fact, I didn't put this trade on because of the trading update. I had no idea, But the reasoning was because, well, I'm worried about the oil price, and MTN indirectly is exposed to the oil price through its large business in Nigeria. And also just the technicals looked so weak to me that it looked like this share price was going to break to the downside. So what we did, we went short of 800 CFDs at 217 Rand with a stop loss of 221 Rand. And then we were looking for the price to go down initially to 210 and then to 200 Rand potentially. Now, what happened is it didn't get to 210, so we were holding the trade, and then all of a sudden this morning this trading update comes out and the stock is hammered down 5%, all the way down to about 200 Rand a share. So that allowed us to exit this trade. In other words, we bought back that short position at 202 Rand 85. And that netted us a profit of 10,600 Rand on this short trade. So it's an excellent story for us in terms of being positioned on the right side, on the short side as well. Because I've also said many times, we've done well on this show with it being a bull market for the last 6 years. When it becomes a bear market, we're going to that's when the real test comes. And I must say, I'm comfortable and I'm encouraged by the fact that we've been getting some shorts right now. Because
it is, as you say, and you've said a lot of times on the show, it's not your natural position to take a short position on the market. But I guess you as a trader, you have to trade what you see, and you've got to be nimble and
absolutely
change your approach sometimes.
You do need to be nimble. You do need to trade what you see. And if the market turns from a bull market and starts to look a bit bearish, well, then you need to trade it according to that. And that's why I think if this market is going to remain weak, we're going to probably be looking for more short positions to trade looking forward.
Garth, so taking that all into account, the loss on Kumba and the gains on Sasol and MTN, where does the portfolio stand?
So we're sitting at a new high for the year now. We're up 39% for the year with 347,000 Rand in our portfolio. Remember, we start the year with 250,000 Rand. So it's an excellent performance in what's otherwise been a rather soggy market. You can see all of our recent trades there. We've still got our option structure open, which runs out to the third week of September. And then Sasol is still open. MTN, we've taken a profit on that short. Kumba, we took a loss there, but it was small and not significant in the scheme of things. So all in all, we're looking good.
Well, looking great, in fact, 39%. So that charity handout is going to be exciting at the end of this year. Let's hope we can keep it up. And then Garth, just end off this show with your next course dates.
Yes, so I've got courses coming up in August. In Cape Town on the 15th of August, I'm doing a high probability trading course. And then in Bloemfontein on the 21st and 22nd of August, I'll be down there presenting courses as well. So anybody that would like to attend either of these courses, please email me on garth@traderscorner.co.za and I'll send you all the details.
Okay, great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.